our National Association. Welcome to our National Association of Black Women in Construction um, Investment Club Education. And my name is Ann McNeil, and we are starting with a silent moment of meditation. And so, if we can all just maybe bow for silent meditation, please. All right, amen. All right, today is our Education Tuesday, and we are a part of the Better Investing, which it was formerly known as the National Association, National Association of Investment Clubs, and now called Better Investing. And if you'd like to get more information about Better Investing, you can go to betterinvesting.org. And if you'd like to get more information about our National Association of Black Women in Construction and our investment club, you can go to nabwic.org. I would also like to properly introduce our club members. And first, we have Sharon Jackson, who's our president, and she's on. She'll be presenting. And then we have Nicole Allen, who's our vice president, and she's on, and she will be sharing education. And then we have Carolyn Modesk, who's our treasurer, and she'll be sharing. And excuse me, Doretha Dennis Jones, who is our secretary, and of course, she will be sharing. And I'm an humble member, and I will be sharing a YouTube video from Better Investing about the SSG. But we also have with us today two of our aspiring members, Valencia Warren Gibbs and Mia Ferguson. So right now we're going to go ahead and get started, and Mia Ferguson will be sharing her information starting with her SSG. Good morning, everybody, and good morning, Mia.
Good morning. Good morning, everyone. Okay, I'm a co host. So, first, I'm going to share my screen. Can everyone see my screen? Something weird going on.
Yes,
Yes,
we are
Mia,
able
we
to
can see
see
you.
it.
Yes, Mia, we can see your screen.
Okay. Okay. Awesome. So, I'm super excited to be able to present this morning. Um, First, I want to thank everyone for allowing me to present and just seek the opportunity to be a part of this investment club. And I'll jump right into it. So, today I'll be presenting a 5 year stock selection guide, the SSG, for an analysis on Costco Wholesale. And they are a Washington based membership wholesale warehouse club. And I'm super excited to present about Costco because personally, I'm not a Costco member, but I do shop with their competitors. And, the people that are Costco clients are just loyal Costco clients. So I was interested in them to take a deep dive into, what it is that they're doing. Um, Hold on one second. Can everyone can see my screen, correct?
Yes.
Okay, give me a second. I'm trying to change
Mia, I
the
just sent
way.
you a text of what we see, Mia.
Yeah, that's what I see here. So I'm trying to. This is what I'm gonna do because mine is showing different. So give me 1 second. I am going to do this a little bit different. Now, I thought I was. Not everything went away. My apologies. When technology works, it works. And when it doesn't, it just chooses not to.
Okay, Mia, you want us to go to someone else and then come back to you?
Um, okay, give me 1 second. I think that I might have it now. Tell me if you all can see my screen now
No,
in presentation view. You can't?
no.
Okay, if you could please, I don't know. I'm gonna put it in a different format while you go to someone else, and I'll let you know as soon as I'm ready.
Okay, so Doretha, Nicole, Sharon, which of you would like to go next, please? Or Valencia?
I'll go. So the article that I'm looking at comes out of the November magazine, and it's called "Is Cash Flow the Real Dividend Driver?" What brought me to this article is that you know older people, which is so funny. I guess I'm considered an older person now. In the day, would buy stock primarily on the fact if a company provided a dividend, and that's all they looked at. Did it provide a dividend? And so, what they're now saying is that you have to do a deeper dive into the health of the company. You need to start looking at whether there is appropriate cash flow to maintain the dividend. What really brought me into this is the St. Louis chapter. They almost always look at cash flow. When we look at a company, a lot of times we'll look at the balance sheet and we'll see, okay, how much money they bringing in and what is their expense. And we may look at that, but we don't, a lot of times, don't go to the next step, which is actually their cash flow. They're suggesting that we look at, they're suggesting that we look at, you're telling me to, but I don't know how you want me to adjust it. So,
That's perfect, Sharon. No, just up a little bit. Just bring your.
okay, so I'm just going to keep going. So, what they're saying is that on a yearly basis, on a trailing 12-month basis, we need to be looking at the cash flow to determine, is it increasing, is it decreasing? Have they brought on new expenditures? Now, one of the things, a good way to look at it, and I did not look at this when I reviewed Schwab. Schwab had a major uptick in their expenses. They bought a company. The whole point was to expand their capacity. Expanding capacity is great. But what I didn't look at was their cash flow over the last 12 months. Is it sustainable in terms of their dividend? And they give a nice dividend. Now, the other thing that they're saying is you don't just look, because what'll happen is that they'll start borrowing from other places in the company, other places that'll start biting and taking that'll start taking away their income and pay in order to pay the dividend. And the only way to look at that is to look at the trailing 12 months to check on their cash flow. They'll also say to throw you off the track. And this is the thing that we have to become smarter in looking at businesses, because they will give you information, they'll leak information that makes it look as if they are in the process of developing new growth. So they're saying that you have to do a deeper dive. They're also talking about a good thing. A lot of companies are doing buybacks. So you have to track that, because buybacks also naturally use up their funds. So this is the last thing that I wanted to say, is that I'm going back to Schwab. So Schwab, yes, they did have a major increase in their debt. They did buy a new company. They did, expand their capacity. But the thing is, too, after I looked at it last night, or watched the St. Louis chapter look at it last night, their cash flow was deep. They bought an additional 50 shares of Schwab last night. So anyway, I'm just wanted to say that I'm going to suggest, and I'm going to suggest at a club, that not only do we look just at not only sales and EPS, but we also look at cash flow, because that'll give a deeper understanding about their financial capability. That's all.
Okay, Mia, are you ready? If not, I'll go.
I think that I got it put in another format now so that I can show it.
Go ahead and share.
Okay. Okay, are you all able to see my screen now?
Yes,
Yes.
thank you.
Awesome, awesome. Okay, so back to Costco. So as I was stating, was very excited to have an opportunity to do some research on Costco and learn a little bit more about, what it is that their clients see in them, and what it is that appeals to them as, as a membership club, especially with someone that I do business with, their competitors at a high level. So I had an opportunity to do an SSG on them, and as we can see, Morningstar gave them a grade of an A, which signals that they have a high financial quality and strong competitive advantage. Okay. So Costco, their ticker is COST, COST. And their industry is discount stores. Their sector is consumer defensive. They are in the NASDAQ 100 and S&P 500. And they have one of the most reliable business models in retail, the membership warehouse model. And they emphasize that it's a strong market cap and stable trading range. There's also mention, if you do any research on them as a company, that their warehouse model drives their consistent customer loyalty, and that's a basis of one of the reasons why they have such a strong portfolio. Okay. All right. All right. So over the past 5 years, their sales have grown about 8.3% annually, which is strong for a mature retailer. Their earnings per share grew even faster at 12.6%, showing that Costco is just continuing to just improve their efficiency and profitability as a company. They the analyst experts expect these trends to continue in this direction, with the future EPS projected to grow around 8.9%. All right. Based on their annual report that was done at the end of their fiscal year, which was August 31st, 2025, their performance just continues to show consistency. Their EPS grew faster than their revenue, which indicates their margin improvement. And this shows that there's resilience within that particular company, even during economic conditions that we have seen, this year, what with it being tariffs and things like that. And I'm just gonna kind of go back to one of the things that Sharon said before we got ready to start. One of the things about Costco is they are currently in the news and suing the federal government over the tariffs that have been imposed on them as a company because of the impact that it had on their business model with everything that's going on in the um, Trump administration and the choices that have been made regarding tariffs. Okay. Next, we will talk about their management quality and the trends over the past 5 years. So their return on equity, their ROE averages about 29.9%, which is it's huge. They signal just strong management performance and that their management is doing a great job with just continuing to ensure that they stay ahead of the curve. Costco's debt levels have actually decreased over time, dropping from about 28.2% debt to capital to roughly 21.9%. And this means that management is both profitable and they have they're very disciplined financially, which is a great combination for an organization in reviewing them from an overall perspective. Okay. Then we have their 5-year P&E ratio, and they typically trade at a premium, and that's because their market value is so stable and they have predictable growth. So the current P&E is around 49, which is high compared to many retailers. So, but it's also aligned with their historical valuation ranges. So it's expensive, but that doesn't always mean that it's overpriced when they show consistent growth and low risk and they're low risk. Now, based on historical valuation and projected earnings, the forecasted high price for their stock is about $1,352.70. The forecasted low price is $752.10, which reflects a conservative estimate, and that gives their range of about $600.60 according to their SSPG. I'm sorry. Okay. Okay. So this particular model gives them in the buy, hold, sell framework, it currently gives them a buy, their current price gives them is within their buy zone. As I stated, their buy zone is between 752 and 902. And currently they are at the low end of their buy zone. So currently that's what they are as far as the SSG in reviewing their portfolio. Right. I do recall that this is something that Sharon loves to see. Their upside downside ratio. Their upside downside ratio has is about 3.2 to 1, meaning that their potential reward is more than 3 times the potential risk. And Better Investing considers anything above a 3 to 1 ratio to be acceptable, an acceptable investment. So Costco exceeds that standard, which a high ratio likely means that this stock offers strong long-term potential with manageable risk. And there are 5. Costco offers a strong potential annual return. Forecasts estimate around 8.6% annual price appreciation over the next 5 years. As we can see, their price appreciation is plus 51.2% currently. And this places them as a stable, moderate growth investment, and it's ideal for long-term wealth building. Costco's membership model generates recurring revenue. Their strong management supports their sustainable growth. Morningstar's A rating, and all of these metrics place Costco firmly in a buy range for reviewing their stocks. And oops. Costco trades at a premium valuation, which may reduce their short-term upside. So these are just some of the risks with looking at their portfolio. Their retail margins are naturally narrow, but their economic slowdowns can impact their discretionary spending that they have as a company. And they continue to have strong competitors like Sam's Club, Amazon, and Walmart that remain, a strong competitor for them in the market of what it is that they do. And based on their strong 5-year growth, disciplined management, and a favorable long-term forecast, Costco receives a buy rating from the SSG. It offers a blend of stability and growth, making it a high-quality stock for long-term investors. Costco is a company that rewards patience and consistency, just like its business model. Thank you so much. That is my analysis of the SSG for Costco.
All right. Thank you. Thank you. Thank you. Thank you. Excellent. Okay. Who would like to go next? Doretha has
Good morning.
Nicole.
I'm
Okay.
here. I
Okay.
can
Go
go
ahead.
next. I can go next. Good morning, everyone. Not only am I secretary for the Nabwic Investment Club, but I am also the portfolio manager. And with that responsibility comes watching all of the stocks and what's happening with them on a day-to-day basis. We've been watching CVS for some time, and I had have a lot of questions and a lot of concern about them. And so it just so happens for December of this year, the Better Investing magazine published an article with them. They are an undervalued company, but they have some very strong things going on within the company. So let me just go to the article. So, the title of the article says CVS Health Corporation Integrated Healthcare Reshaped for the Future. And that part is what really caught my eye, reshaped for the future. The little summary right under it says that they have undergone some major changes. They've had right now they have a new CEO. They've had this is the third chief in 4 years. The business acquired 10 years ago just entered Chapter 1 bankruptcy, and they've closed a significant number of retail stores, eliminating about 5,000 administrative jobs within the 3 years of reconstruction. Very significant, very significant. Um, so that's the summary. Let me just go into detail a little bit about what's happening. So we know about the administrative changes, but let's go into the inside of the company and what's happening with there. In September, CVS subsidiary Omnicare, which is a component of where they service residents of long-term care facilities. They filed Chapter 11 bankruptcy. The jury found that the business was liable for fraudulently billing Medicare and other federal agency, dispensing drugs without valid prescriptions to elderly and disabled people. Awesome. I just could not believe that a major company like that will be doing such a thing. The jury determined that Omnicare has filed more than 3 million false claims over 8 years through 2018. So the courts did allow them to work on this as they move forward, and through the lawsuit. Let's see another thing that's happening in the company. Let's take a look at their finances. When the stock closed in September of 2029, they were 2.3% below the 52 high of $77. That was something else significant. They do have a lot of powerful pieces moving throughout the company. They do operate retail health clinics. They have more than 1,000 walk-in sites. They also produced $130 billion, their healthcare benefits. Also, the company has something called Cardinal Health, which they brought on Red Oak sourcing, which helps them with their operations, and that's a joint venture for them. Let's see, one final piece for them. They are operating up 35%. Their earnings per share, $1.60. That's up 47%. And they are the largest pharmacy chain operators in the United States. Another couple of tidbits for their finances. For the fiscal year of 2024, they earned $231 billion in their product sales. In their premiums, $122 billion. That's 33% up. Their services, $16 billion, 4.4%. And their net investment income, $2.2 billion. So they are continuing to bring in revenue. They just have to get through this Chapter 11 court situation that they're going through. And most of the analysts says that 2026 looks really good for them. So after looking at all of this, not making any recommendations at all about CVS. I'm just keeping an eye on them as the portfolio manager. And that's my report.
All right, thank you, Doretha. Valencia or Nicole? I'll go last with video. Valencia or Nicole?
I didn't have anything immediately to share, but I'll share next time. Be prepared because I've been reading more of the Better Investment magazines that are in my office.
Perfect. All right. Thank you so much, Nicole.
Yep, I'll share. So,
Thank you.
so I've been sort of catching up on my BI magazines, and one of the things that came across that was interesting was preparing for retirement. I have that in my eyesight probably in another 10, 15 years. So I'm going to go through some of the pitfalls to avoid when looking at retirement, preparing for it, and how my Social Security benefits and other resources are going to tie into it. So this comes from, I believe, the June, July magazine article, and it talks about 5 epic retirement fails to understand and avoid. The primary one being Social Security. We all know that that's a major part of our assets as we age, particularly if we paid into the system for years. But it does talk about when we should take those retirement benefit. We know it's typically around age 62-ish is the early in, or around 70 years old, which typically is those, you take it at the later end. The sweet spot is somewhere around 66, 67, depending on whether or not you're still working or whether or not, you'd like to delay those options for a later date. One of the things it talks about is how does that roll into your additional investments? And that's something that you want to consider because retirement is such a large part of our accumulated wealth. We need to balance that with the other investments that we have. The other pitfall was the investments that we may have, whether it's in our 401ks or our brokerages or other investment vehicles. Selling those investments, particularly as we age, can be very risky. They're a nest egg. And so we want to be intentional about the assets that we've accumulated, continuously looking at the growth of those assets, but being more restrictive in selling, especially those that are still growing as we retire. We don't get that compounded interest later in life as much as we do when we're younger. So we want to look at how and when we sell those investments and whether or not they are accounting for our our complete assets at that time. So looking at those things.
Nicole, we can't hear you. I'm sorry.
I thought it was just me. I'm looking down like,
Yeah, I thought. Yeah, I was like, "This is she mute?" I thought it
Yeah,
was.
we just saw your mouth moving, and I think everybody went silent, and someone finally said, "I can't hear."
you're on mute, Nicole, please. Thank you.
She's not on mute. Her phone, her device isn't showing on mute. It looks like her mic might have been turned off or something. She's not connected to audio. I don't think she can hear us either because she's still talking.
Okay, well, in that case, we need to move on with live. So, um, if she's not paying attention, she's gone. Okay.
Yeah.
You want to go ahead and give your book report then, please, Mia, until she comes
I
back?
sure, I sure will.
Thank you so much.
No problem. Doretha, I told you I was ready today.
There you are. Love it.
All right. So my book report was done on the book In Search of the Green. And it's How to Form Your Own Investment Club When You Don't Know from Beans. And that's by Patricia Edwards, Lisa Renee Charles, and Mary Ellen Pryor of the Beanstalk Investment Club of Miami. All right. Um, this book is a beginner friendly guide that explains how anyone, even with no foundation of doing anything with stocks, can form and run an investment club successfully. Okay, so I'm sorry, I'm gonna go back here. So this book was written by these three women from the Beanstalk Investment Club of Miami who started as beginners themselves. They created this guide to make investing just simple and approachable for the average individual. And their main message is that investing is easier when we do it together. Um, the authors of this book wrote it because they saw how overwhelming it was um, in the stock market and how it could just feel like a huge task for someone to take on that was brand new to investing in the stock market as a whole. They wanted to share their experiences and show that group learning builds the confidence and makes investing less intimidating as a whole. Okay. So first, just starting out talking about what an investment club is. They kind of broke that down inside of the book. And it talks about an investment club is basically a study group with money. And I think that's the easiest way to sum it up. And it's members pooling small monthly contributions, researching companies together, and voting on what to buy as a group. And it's both an educational tool as well as a financial strategy for that group. So that's the overall concept of what an investment club is. They kind of went into details about that inside of the book and describing the functions of an investment club and what it does. They used a metaphor in the book, a garden metaphor, and they wanted to. This is one of their main teaching tools, and it's just basically comparing investing to gardening. And it talks about how you plant a small seed and you care for them consistently, and over time you harvest results. And this really helps beginners understand that investing is a long time process, and it's not like a quick flip when you just buy something and get rid of it quick and make some quick money off of it. So I loved the way that they went into that concept and describing, the process as something that, the average person could understand and relate to. The book provides a clear step-by-step guide on how to start an investment club. It provides, first it tells you to choose committed members to be in that group, then create the bylaws so everyone knows the rules, then elect your officers to stay organized with what's going on. Then you're setting up your brokerage accounts and opening up those financial accounts. And then finally, you're just focusing heavily on educating the group and just continuing to learn as a whole as you continue to move forward with that investment group. They broke down the club's roles and responsibilities, within an investment club and what that looks like. And it teaches just the basics. And as an organization, it talks about how the president leads the meetings, the secretary keeps the records, the treasurers handle the money, The research team, which is everyone else pretty much in the investment group, they study the companies, and they really talked about how clear roles help to prevent the confusion and keep the club running smoothly. And that's one of the key components to ensuring that it's a successful club. All right. The book teaches just the basics. It talks about how you don't need a lot of money to start. It recommends you start small and be consistent with your contributions, and that's what matters most in the process is the consistency. It talks about the importance of the research component, and the group really should choose strong companies and spread out their risk amongst their portfolio and focus on long-term performance. So the things that we're learning here are definitely aligned with the items that this book shows, and I appreciate Nicole providing this as the recommended reading that I do as far as the book. One of the major things within the book and what it talks about is just the power of learning together. And it talks about how, when a group studies investing, then people become more accountable. They stay accountable with what's going on. They grow more confidence in what they're doing, and they make better decisions as a group because everyone is informed, they're educated, and they're making decisions that are not just impactful to them, but to the group and the health of that group. And investment clubs can also be motivating and empowering within an environment because of the sense of belonging, as well as being a part of something greater than oneself that's going to enhance that individual. Okay, the strengths in the books. I think that this book's biggest strength is how simple and just user friendly it was. It gave like a realistic roadmap, and it included examples that were relatable from the authors, and they were everyday people, which allowed for it to be something that you saw them as an investment club and the things that they were doing. And it just truly spoke to people who are scared and unsure of how to get started and what to do next. So it was a really good foundational book in doing so. My key takeaways, the biggest takeaway that I got is that investing is not just for experts, and that anyone can learn, especially when you're working with the group. And the real key is just the consistency amongst yourself and your commitment to the group, and not so much about where you start. It's about the growth that you have during the process. And, from the readings itself, I just came up with some questions, and this is just to wrap it up. Some questions for discussion that I thought about in reading the book, and just thinking about investment clubs as a whole, because it allows you to consider, being a part of something greater than yourself. But some of the questions that I came up with are: what are the challenges that a new club might face? Who would benefit most from joining a club? What skills could you bring to a club? Because it's all about that collective effort from the group. And what part of the book stood out to me the most? And like I said, I have talked about the metaphor with the garden is, I think, what stood out to me the most, because it was just a really good, clear, and concise message that I think can be communicated across all platforms in order to have a better understanding of an investment club and what it does. And in conclusion, In Search of the Green, it shows that investing is a journey that becomes easier with education, teamwork, and small, consistent steps. It's not about a race to the finish. It's about the consistency and doing small things that have huge impact over time. And investment clubs create spaces where anyone can learn, grow, and build wealth together. Thank you so much. And I am done with my presentation.
Okay, thank you so much for that. I want to go back to Nicole, if you'd like to share. And while Nicole is deciding if she wants to continue to share, I just want to mention that when our investment club started the very first club that I was in over 25 years ago, the ladies from Beanstalk, and even this club that we're in now, the ladies from Beanstalk, as a part of our Better Investing South Florida chapter, they helped us to start both of these clubs. The first club, about 25 years ago, they were writing the book because everybody that looked like us kept asking them, hey, can you help us? Can you help us? Can you help us? We want to start an investment club. Can you help us to start a club? And they found themselves answering these questions over and over again, but at the same time, they also found themselves gathering some of the best practices, and the product of that best practice was this book. So my question for you, Mia, was did the reading of this book help you in becoming a member of this club?
It definitely did, because I think that there was, that not necessarily, I won't say fear, because I feel that God doesn't put the spirit of fear in you. However, I think that it definitely took away the anxiety of, joining a group of people who have already been established. And I think that's the biggest thing. And but it definitely allowed me to feel like, hey, there's a capability to meet me where I am. There's just continued education and learning throughout the process. And I felt like that, being a lifelong learner, it definitely helped to push me over the top and create that additional excitement for what it was that I wanted to learn with being a part of this investment club. So yes.
So I think it's very important then if we put that information about Beanstalk in the chat here and also on YouTube and also on our social media, because we're sharing this YouTube on social media. And I think it's good for people to understand in and out of better investing. There are a lot of tools and a lot of best practices, and this is just one of them. And sometimes it makes it easier for people to understand how easy it is to invest, especially when the tools and the volunteers are already there willing to help you for free. So I just want to share that. Nicole, did you want to share? Carolyn Modesk, did you want to share?
No, I'm good. Thank you.
Okay, all right, Carolyn. She might have
I'm
dropped.
already at work now.
Okay, Carolyn, I
Yeah.
think maybe in the future you may want to go first, maybe. Before you leave, we can just start with you maybe in the future to help support the timing. Okay?
Will
Wait a
do.
minute. Did you not hear my presentation about the retirement?
Yes, we heard part
Oh,
of it, but we didn't hear the end of it, and we couldn't get your attention to let you know that you were not on mute, but we could not hear the balance of what you were saying. So while we're
okay.
waiting,
Yeah.
check the chat. If you could check the chat on your phone, because we were trying to
Okay.
communicate with you unsuccessfully.
Okay. Thank you. Sorry about
Yes,
that.
but we did hear the beginning, and so yes,
All
yes.
right. Thank you.
Thank you. Thank you. Okay, all right. So,
As we wrap up, I want to make sure that Mia and Valencia know how excited we are about your participation in our investment club. We are excited about the fact that, first of all, you're youth and the fact that you are on the investment journey. Okay. So it is, I know that you know it, but I want to make sure that we verbalized it so that you heard it in your ears. This is going to be very exciting. The other thing, and I know we are coming to a close because it's almost 10 till or past 10 till. Um, you know, investing is, Nicole participates in another group, has learned a lot. I participate in the St. Louis chapter. They are a very experienced older club. I know that Doretha participates in a club. So those things that you learn elsewhere also is very important that you bring back to the club, because this is a journey and this is a learning experience for everyone. One last thing. So January, this is a time with people that have a lot of money, and Valencia and Nicole probably already know this. They're looking at their portfolio. and they're doing major sell-offs. They're waiting and they're going to do major sell-offs, which impacts the market. The market is probably going to dip in January. We need to look at our personal portfolios. We need to talk to our advisors, and we need to look at Nabwic portfolio, because in the second week in January, and I've been hearing this several times, that is probably going to be a buying time. The market typically dips that second week because there are people doing major repositioning. So it is time to go. I just wanted to make sure I got that in there.
All right, Sharon, everybody, I will hold my presentation, which is a little lengthy because it's a video from YouTube. I'll drop it in the chat and we'll start with that next week. Thank you so very much, everybody. And I'm going to
time. I apologize, Anne.
That's quite all right, Sharon. You're the president. You decide all things. That's why I take my camera and take a picture of you so we can post it on social media. All right. So Carolyn and I will go first next time. And we want to thank everybody who's listening to us live or in the future, because this is Evergreen. Again, we are the National Association of Black Women in Construction Investment Club. And you can go to nabwic.org and get information about our investment club. If you're interested in becoming a member, we do have a process and we are open for membership. As it relates to our mothership, which is the Better Investing Organization, we would like to have you go and actually, let's see who can help me here. Mia, can you share, go back and share screen, please? I'm just going to wrap up with the Better Investing. Can you share the Better Investing website? I just want to make sure we add value every time we come here, and we wrap up and close with Better Investing website. If you could just go to the website, Mia. And we want to encourage anyone that's interested in learning more information about this phenomenal organization called Better Investing. In addition to the Beanstalk book, you can go to betterinvesting.org. And we are all volunteers with this organization. And there's chapters all over the US, regardless of where you live. But many of our meetings are virtual and they're online, and you can participate anywhere. We also have a free 90-day membership on this website. You can go to the very end of the website at the very bottom, and you will see 90-day free membership. And that will give you access to the tools. Now, if you are a member, if you are currently a member, you're not going to see it at the bottom. But if you are not a member, you will see it at the bottom on your screen. All right. So we just want to encourage everyone to consider becoming a better investor. And if you're interested in more information, like I said, you can go to betterinvesting.org. And again, we are the National Association of Black Women in Construction Investment Club. My name is Ann McNeil. On behalf of our president, Sharon Jackson, we want to thank you for listening, and we'll see you next month. Thank you.
Thank you.
All right. Bye-bye.
Thanks.